more today to this special edition. So, introducing to us what is known as index. Okay, so and this will be very useful. This information will be very useful to some of our audience who live in North America. I'm talking about places like US, Canada, and some South American countries and all that. So this investment opportunity will be very useful to you, and I need all of us to settle down and listen to it and see the usefulness to you and your family. Okay, and this investment opportunity is called Index Universal Life. Now I want to say it again, Index Universal Life. This is a portfolio and it's going to change your life. I need you to understand how it works, how you can apply it to your life that will cause changes for you. Okay, now I want us to know that with this portfolio, people are turning into millionaires in dollars on a yearly basis. So you too can do the same. The same thing can happen to you. You can be beneficiary of it. Okay, so but the most important thing is for you to know how it works. So in the next couple of minutes, I'll be unfolding some benefits of this Index Universal Life. Okay, Index. Now, this is a portfolio. It's a financial portfolio they are going to set up for you and your family. It's like building your own bank. You build your own bank so that when you need cash, you can always go to your bank, just like you go to commercial banks out there. You make withdrawal of your money. Okay, that is what this one is likely to be. So it's like a financial portfolio you set up, then you let it run over time. Then after some time, you can start making use of it however you want to make use of it. So now here are some of the benefits of having IUL. Okay, now when I mean benefit, I'm talking about living benefit. That is the benefit you stand to enjoy and make use of while you are living, while you are on earth. So that is why I call it living benefit. Okay, you don't have to leave this world and have the benefit transferred to your beneficiary or to your loved one. No, you have to enjoy the benefit while you are here. And this is very, very important. And a whole lot of people are not aware of this portfolio. Okay, so what people know is when they talk about insurance, you insure your life. When you are gone, your family will inherit what you are worth for. No, that is not what I mean in this sense. That is why I really need us to understand it. You enjoy the benefit while you're here. Okay, now these are some of the benefits. Number one benefit, you have access to cash. Access to cash in the sense that you are going to run the policy for some time. When you want to withdraw some money, you can make a withdrawal while the remaining one will still be growing and compounding for you. Okay, that is benefit number one. The benefit number two is compound interest. A mastermind quotes, he says, a compound interest is the 8 wonders of the world. He who understands it earns it, and he who doesn't understand it pays for it. So are you going to be the one that will be paying compound interest, paying money out of your pocket, compound interest to people, to some vendors? Or are you the one that want to position yourself to let compound interest work in your favor? You see, so one of the living benefit of this portfolio, it is compound your money for you. It compounds your money for you monthly, yearly, as the case may be. So let me give all this scenario. If you get a car note, you get a car from dealership. Maybe the car worth like $20,000. The actual cost of buying the car is worth $20,000. Do you know that if you get cash and give this $20,000 to the dealership, you get a car, and that is it. You're paid off. There's not going to be a form of interest that is a charge on it. There's not going to be any form of compound interest that will be charged on it. That will be working against you. You know what I mean? So let me explain it, put it this way. If you have a car that the actual cost price or actual buying price is $20,000, for the fact that you don't have the cash to pay immediately, you'll be made to pay what they call compound interest. So this additional amount that you're going to pay other than the actual cost price of the car, you see, it is usually calculated using what they call compound interest. And at the end of the day, a car that worth $20,000, you may end up paying $35,000 or $30,000 at the end of 5 years. You understand? You're not going to get a car at the end of the day at the actual price of $20,000. So that is what compound interest does for you. I get what I'm saying? The compound interest takes away more money from your pocket. So this portfolio will position you to make the compound interest work in your favor. You get what I'm saying? And also another example, a whole lot of people in North America, they buy their houses on mortgage. That mortgage means that if the cost of the house is like 400,000 US dollars, at the end of 30 years mortgage lifetime, you would have paid up to 1.2 million, you would have paid up to 1.5, 1.6 million, as the case may be, because these things are computed on compound interest. So in that regard, you can see that compound interest is working against you as against when you're using your cash to purchase your property or your investment property. I could go on and give us more examples how compound interest is working against us as people. But this kind of portfolio, Index Universal Life, it makes your money to compound for you and make that compound interest work in your favor. That is where the quote comes from. If you understand it, you earn it. But if you don't understand it, it works against you. You see that? So that is living benefit number 2. Let me talk about living benefit number 3. There is a court called probate court in the US. You see, so that court is empowered to administer the estate of a disease. You see that? So meaning if somebody dies in the US, what the probate court is empowered to do is to lay hold on all your assets and your liability and cash savings and all that. They will lay hold on it for the time being. Why do they have to do that? They want to verify using your social security to check out if in one way or the other you're owing any parastatal, you're owing anybody and all that. So when that check is done, if you're credit worthy, you're not owing anybody. Of course, they will unblock all your account, all your savings, all your cash savings, that you can have your beneficiary can have access to it. But in a situation where you have money saved and you are gone, they discover that you are owing, maybe you can't note and all, they will use all your savings to settle all this or debt obligation you're owing when you are alive. And if there's any money remaining, that's what they will pay to your beneficiary. Okay, that's how it works. So, but this portfolio, Index Universal Life, it is probate court free. It is probate court free, meaning any card that is accumulated for you in this index portfolio, you have it 100%, and the probate court does not have anything to do with it. It is separated. That's what the law says in North America. So you see that? So money you have there, it is money that you have the 100%. They can pay it to your beneficiary 100% without any deduction. You see that? Now, I want to give us an example of what happened. I think it's 2023. All of us know the app they call Cash App. The owner of the Cash App died, and that is his name is Bob Lee, right? Bob Lee was the one that developed Cash App that we used to send money from one person to another. You see, so that man, when he was alive, he didn't know anything about this kind of portfolio, right? So, but when he was gone, record shows that the man worth over 10 million US dollars. You understand what I'm saying? And I don't want to go into detail what led to his death and all that, but somebody killed him, Now, what happened after his death? As I speak to you, the family of Bob Lee right now, they are going through what they call probate. Probate in the sense that the man did not leave any money in this index fund when he was alive. Okay, so probate court lay hold on his cash savings because they want to go through the legal process and settle all his debt obligation while he was alive. But as I speak to you now, even the family, they have to go into trying to raise money through what they call GoFundMe. How much is GoFundMe going to give to you or make you to have another? Maybe people will give $20, some people will give $50, some people will give $100, some will give. At the end of the day, you're not realizing much. So why are the family doing all of that? They are doing all that just to get money to fight for the litigation, the legal case that is arising as a result of Bobby's death and all that. So the family did not even have access to the cash the man saved while he was alive. You see what I'm talking about? But if the man has, built up cash in this index fund and all that when he was alive, immediately it's gone. The whole total sum plus the accumulation plus the compound amount it has accumulated, it will be paid to the family 100%. You see that? So that is another benefit of it. So it is important that we understand it so that we will not be in the shoe of what Bob and the families are going through right now. You see what I'm talking about? The another benefit, what we call tax-free benefit, meaning when you need your money, when you want to lay hold of your money and make use of your money, you are withdraw your money tax-free. No deduction is going to be made on your money. No tax is going to be charged on your money. You withdraw it. If the amount intended withdrawing is $50,000, you get it $50,000, 100%, no deduction and no tax. Okay. Another benefit of this Index Universal Fund is lawsuit protection. Not only lawsuit, bankruptcy and lawsuit protection. So you are protected from lawsuit in case anybody sue you and they confiscate and government lay hold on all your property, all your investment property. But this particular portfolio, the money that you've saved in there, the money that is compounded for you in there, lawsuit does not see it. Bankruptcy does not see it. Okay, that is why some elites in the North America who understand how this policy work, what they do, they put all their money there. There are a couple of them that have declared themselves bankrupt. You understand? At the end of the day, they still came out and emerged millionaires in the society. You understand? And there are a couple of other benefits. I also want to talk about another living benefit. It's called chronic illness and that illness and all that. I want to summarize both of them together, but they are different. I just want to make the video short. Chronic illness and critical illness, they are like a class of illness. Somebody can be, suffering, like you are going through a form of illness that you are bedridden, you are not able to do your daily activities of daily living and all that. Maybe you're unable to go to the bathroom by yourself, you cannot eat by yourself, you cannot move from one place to another. Those are activities of daily living. I get what I'm saying. So when you're on air, you are living and you suffer this kind of situations and all that, the index fund will be paid out. A particular percentage of it will be paid out to you as a beneficiary while you are living, so you don't have to be gone. But let's say another benefit of it. Another benefit is like death benefit. Death benefit is tax-free death benefit. Like, for example, when somebody is gone, you are no more. The total sum of money, 100%, will be paid to your beneficiary. Maybe your children, maybe your wife is alive, or maybe the wife, that husband is alive. They will be paid to a beneficiary and all that. So these are these things. I have so many other benefits. We also have another benefit of, we call it, $1 million baby. So if you have $1 million baby, like the law says that when a child is born, after 30 days, you are at freedom to set up this Index Universal Life Fund for that baby. After 30 days, you set it up, maybe $1 million with $1 million. You start paying what they call monthly premium and all that. So when you do that, that child is growing in a couple of years, maybe 5 years, 7 years. You can imagine, and a portfolio that is paying up to 7.25% per annum, what is going to amount to, in the life of that child. But that child gets to like 10 years of age, 15 years of age and all that. And there's something about inflationary factor in this kind of portfolio. And it, at any point in time, and any investment you are doing, that investment must be greater than the prevailing inflation rate in a country where you have this kind of portfolio. And this portfolio qualify for it because per annum it gives you more than 7% on your investment, on your portfolio. You see that? So it doesn't, the inflation system doesn't go close to it at all. So you have leverage, you are ahead of the inflation rate and all that. So that is another usefulness. And what I'm telling us, it has so many advantages, so many benefits, so many living benefits and all that. Now, what is your own part to play in this? Your part is to set it up. You set it up, then we screen you. When we screen you to be sure you don't have any criminal background, to make sure you don't have any criminal record, to make sure your background is clean and the rest. So whenever that happens, you may be eligible to participate in this kind of portfolio. But where you are not, you may not be qualified for it. So meaning it is not for everybody, or it is for everybody, but it's not everybody that will qualify for it because there are criteria and all that. So, and I'm strongly recommending this to everybody because a couple of times people are fond of, they earn money and they go to store and blow all the money. They earn money, they go to store and spend all of that money. But if you can invest like 10% of your monthly income, you'll be amazed of what this thing will amount to be in 5 years' time, in 10 years' time. You see, so any portfolio, any investment that is meaningful, it takes time to grow. And if you look at the life of somebody like Warren Buffett and all, Warren Buffett is an investor. That is where he made his money. He's one of the top richest men in the world. He's one of the richest men in North America and all that. So how did he do it? Investment in portfolio like this. You know what I'm saying? So what about somebody like JP Morgan? Go and find out. These people made their money through index fund and plus other investment opportunity they took advantage of. So I'm employing us today. After hearing this, you can make a decision and reach out to us to set up this thing for you. Set up your own bank for yourself. Set it up and see what it's going to amount into. Okay, so it's my recommendation. I strongly recommend. So you can, if you really want you want to learn more how this works and all that, and I don't want you to hesitate putting it in the comment section, and I'll look at it. And if you want to reach out to me, you can put your information right there. I'll contact you and I'll tell you more how it works, how you can get started, how you can begin and all that. You see, so now they always say that a man or anyone with just single source of income is likely to be a poor person. You understand? So where do you belong? So if you do this could be one of the source of income to you if you're able to build it as a family. It's like building your own bank, is what I'm saying. So do not take this for granted. Like if you want more questions, like want to know more about how it works, and just reach out to me and I'll educate you and I can set it up for you. Okay. So in another episode on what I'm talking about, I want to be doing what is called illustration. I will illustrate it with figures and tell us how it works, how the compounding work and all that. Then you can have a broader understanding about it. Then you can make a decision. Okay, thank you very much. And that brings me to the end of this teaching and all that. And I hope that this teaching meets you well. I hope you make a decision from what you learned. Thank you very much for listening. See you again in the next teaching. Thank you very much.